Everybody, welcome to Talking Real Estate with Champions Real Estate Team here at Berkshire Hathaway Home Services Ambassador Real Estate Company. My name is Mark Wehner, the second team leader here at Champions Real Estate Team. Joining me today is Russ Williams with Williams Mortgage. So every Wednesday we jump on, give a rundown what's going on in the real estate market in our Omaha metro area over the last week, kind of give you our thoughts, our intake, our intelligence, and all that kind of fun stuff of what we've seen, as we're going on listing appointments, as we're showing houses, and all that kind of fun stuff. Yeah, so usually we start with a quick tip. So I know a lot of things going on in today's marketplace. One thing is, some of the sellers' houses may be staying on the market just a little bit longer, dangers of overpricing. One thing I just had one of my clients do, we just did a pre-inspection. So I guess, I know we were just talking about what we were going to talk about. I just popped this in my head. But with a seller did a pre-inspection. So their house is probably going to go on the market in the next 6 months to 9 months. They're building a house and things of that sort. So, we wanted to get a good idea of what, if there's any issues that we needed to take care of, why they before they put the home on the market. So some people are like, well, I don't want to know what's going on in my house. Well, that home inspector is going to bring things to light that you may not know, that when you get into a transaction, that buyer may find out, they may ask you to repair it, and now you have a time constraint on when you can fix that item. You got the next 2 weeks, and so you're trying to find contractors or to come out and fix that item, and maybe it's going to cost you a little bit more. So one advantage of doing that pre-inspection is that you're able to know exactly what's going on in your house. You have the timetable to fix it on your time rather than that contract's time of the 30 to 45 days that typically those contracts are written in. And then that buyer has confidence when they come and purchase that house or look to write an offer on that house. You may get a stronger offer, especially if you've done your due diligence and you've gotten that house ready to rock and roll, that if you've positioned it in the best place to attract the most eyeballs on it, most buyers on that house, you may get multiple offers. And sometimes when you get a multiple offer situation, clients are like, well, do I do a home inspection? Do I not do a home inspection? Well, I don't, if I don't do a home inspection, then, I'm taking the risk of what I don't know what's behind the walls, or, that a home inspector may find out. So I'm not comfortable offering a little bit more for that house, not knowing what's going on. Whereas if you have a pre-inspection, you open that up to your prospective buyers. Hey, here's everything that they found in this inspection. Here's everything they fixed, everything they haven't fixed or they aren't going to fix. Okay, great. Well, I'm comfortable offering maybe a little bit more because you're making an offer based off that information. So you may net yourself a little bit more money that, you pay $500, $600 for that home inspection, but if it nets you an extra $1,000 more, it gets you an extra $1,000 on the purchase price, that nets you an extra $400, and you don't have the headaches of, while it's in inspection phase, because that inspection phase, if as an agent, as a seller's agent, if we're not shortening that down to a 7-day period, in the contract, it's already hardwired in there, hard written in there at 14 days. And so basically, they can do the home inspection, then you and that buyer go back and forth on negotiations, and all of a sudden that buyer says, oh, I don't want the house anymore. They walk away. Now your house has been off the market for 7, 10, 14 days. It goes back on the market, back on market, and everyone's like, well, what's wrong with it? It kind of gets this little earmark on it of what's wrong with it. And all of a sudden now, well, I don't know, maybe we'll offer a little bit less. Well, it kind of relieves some of that stress and kind of smoothens out that process. Yes, you may do that home inspection and find something major, but a lot of times that's probably going to come up regardless. If that buyer does it, like I said, you have that time on your side a little bit that maybe you have to delay putting it on. Hey, we want to put it on next month, or we want to, okay, well, we got to push it back because the sewer line's cracked or something crazy like that may take a little bit more time to adjust. So I guess that, what I'm getting at, my quick tip turned into a long-winded tip, but the importance, and the pros and the cons of doing that inspection phase. One, anything you find on that, you have to disclose legally because you know about the house. And two, but that makes a more comfortable, easier process for that buyer moving forward in that standpoint of it. And it kind of removes some of that negotiation on those items. Because sometimes I've seen it where, they write a low, high offer, and then I'll say, well, we're gonna do the inspection, and then we'll negotiate them down from there. So some agents have that mindset, like, let's get it under contract, let's go to the inspection phase, and then let's negotiate again. And so that's where you kind of make sure you eliminate that whole phase. You eliminate the fear of the unknown from both the seller's perspective and the buyer's perspective. So that's kind of my 2 cents on it. Happy to go into it more detail on there, but we like to try to keep these videos a little shorter and sweeter. But did you have anything you want to add on those pre-inspections at all, Russ, that you see kind of from a lender standpoint?
No, they can be helpful, especially when we're dealing with minimum property condition requirements. Knowing that ahead of time can certainly streamline the transaction and make it easier for all parties.
Yeah, and I think too sometimes with FHA, if they're doing an FHA or VA loan, and you're going to have that other FHA inspection, the appraisal, which basically kind of inspection, that can bring up some items that you may have to take care of. And then maybe you say, hey, we're not going to offer it as an FHA or VA, because maybe there's some items that you just don't want to repaint the house because there's peeling paint, or something like that that may come up on an FHA or VA inspection. So looking at the market here as we jump into it. So new listings, so we have 702 listings. So this is, up a little bit from what I've typically I usually pull these numbers right around 9 o'clock after I get the kids to school. We'll come back, pull up the numbers, then we figure out a time we can do the video. But usually those numbers are down in the 600s, but getting over 700 at 9 a.m., that's a pretty good number of inventory that's come on over the last 7 days. So, that's just showing kids are starting to get back to school. My daughter had her first day of school today, and some of those people last month or last weekend are like, all right, let's get this house on the market. Kids are back last week. We're ready to go. Kids are out of the house type of thing. We can do showings, so we'll see a little bit more of an uptick, which is very typical this time of year, and then after Labor Day, once, the schedules kind of iron themselves out, you start seeing more, end of summer. Okay, now let's find a house and we're ready to go in that side of it. So new contracts written, basically similar to what we had the last couple of weeks, so right around that 450, 475 ballpark. Nothing new in that regards, but it is telling me that as we're having more houses come on the market, and depending on what rates are doing, we may have some buyers influx into the market, but we're still seeing a fairly healthy market going through that aspect of it. So we have 453 happy new homeowners on the sold side, so congratulations to them. Let's take a 30,000 foot view here. And when I was listening to a couple national podcasts and things like that, just with regards to real estate, we talk about this number here down in the middle and the bottom here, that months of inventory. So we're starting to see that months of inventory nationally kind of creep up a little bit. And then as we saw the average sale price here basically stayed the same. I think what they say 27%, 27.4% of houses on Zillow over the last quarter or last month had a price reduction. And so what that's telling me, a quarter of the houses, some of those sellers may still have that mindset that like, oh, it's a crazy market, we're going to price it high, and then they start reducing their price. So that's why it really makes it really important, to work with an agent that's looking at that inventory and not just listening and reading, listening to podcasts and listening to the newscast, of still a seller's market, but actually knowing and diving into what exactly your marketplace is. So that months of inventory, that's for the entire MLS. That's for Omaha and Lincoln as an average of 3 months supply of inventory. So what that means is that basically we had zero houses come on the market. We'd have 3 months of inventory left until we got zero. And so that's all price points. Now, what you need to take a look at is over, specific areas that you're looking in. What's that 400 to 500 price point? What's that, 750 and above? What's the months of inventory? And so knowing those numbers can really help you when you're, going to look at houses and what's that price point and what is a comfortable price point, and are these sellers kind of overpriced a little bit? And as a seller, are you going to compete in the competition, or are you just going to participate? That's the thing when I work with my sellers. I can lie to your level with you. Yes, I'd love to get X for your house, but what the market is telling us is here. The market is not always kind, but the market is always right. That's something my dad taught me, who's been in it for 40 years. It's like the market, is going to determine the price. Us as agents, it's our job to interpret that and, put you in the best position from a buyer's perspective and from a seller's perspective, which side of the coin you're on. And working, with me is I kind of use the old mindset from a coach's mindset, sports mindset. Let's have a scouting book. Let's have a playbook. Let's know what the other team is doing. Let's watch what their plays they're running, and how can we, counteract those to get you, the most amount on the seller side, or get you the lowest side on the buying side. And if that seller's being unrealistic, then that's great. We'll come back. And if somebody else wants to overpay for that house, rock and roll. But that's not going to be our client, and our seller, we're going to try to maximize that equity, get the eyeballs on the house. Because if not, if that house sits on there for 30 days, a month, 2 months, what's that going to do to your price? And then you're making an extra house payment, and that the dangers of overpricing it can really come into play in that side. So I guess looking at the numbers, you probably looked at it as I've been talking here. We're at 3956 on the Omaha Lincoln area, Douglas Sarpy County 2326. Existing homes, we were at 1400, so we saw more new or existing houses come off the market or get under contract, and we had new construction kind of pick up the slack on there, because this our inventory for the total last week was 3955. So we saw one house increase. from last week. So, but what we saw is when we take a closer look, our existing homes went down. So some of those either got sold, maybe they're pulling them off the market, or in that side of it too. So, yeah. And then average sold price 357. So that's kind of what I'm seeing, I guess, from the general marketplace of it, what's going on. But I guess let's jump in here with Russ and take away, Russ. What do we got going on the? I heard that isn't the Feds, aren't they at like Lake Tahoe, or where are they at? Jackson Hole, I think
Yep,
is
they
where they're
started
at.
their 2-day, 3-day meetings actually today in Jackson Hole. It's where central bankers from around the world are meeting to speak.
Must be
On
rough.
Friday morning, Federal Reserve Chairman Powell will be speaking, and everyone will be listening for clues on what he might do or what he might be hinting might happen on September 17th when the Fed Open Market Committee meeting next meets. It's expected that they're going to drop rates by maybe 0.25%, but keep in mind that's not mortgage rates. That is short-term rates, things like credit cards, student loans, auto loans. Mortgage rates are driven by the long-term economy. It's specifically driven by inflation and deflation. And in that light, you may remember that a year ago in September, when the Fed had their meeting last year at this time, they dropped interest rates for short-term money by 1/4, and mortgage rates actually went up. So for those of you keeping score at home that are feeling that the Fed is dropping long-term mortgage rates, there is no guarantee of that. And that's actually amplified further by the fact that several of the Federal Reserve regional banks had come out with their early estimates for third quarter growth in the economy, and they are all over the board. Some of them were expecting 2.3% growth, and others are expecting negative growth or deflation in the economy. All that to say that we don't know what's going to happen with the economy. So if you're banking on lower rates for mortgages when the Fed drops rates in September, you may or may not be disappointed. So what I'd encourage you to do is get a plan together now, sit down with Mark and their team. And if you see the home that you want to buy, finance it and purchase it now. You can always refinance if rates come down, but if rates go up or if home prices continue to rise, you can't undo that. So I'd encourage you to make a plan with Mark and his team sooner versus later. Right now, we're just in kind of a wait and see holding pattern mode until the next report comes out.
Yeah, and I mean we've said it time and time before, on this video and just any of my clients is everyone wants to time the market, whether that's timing on the house prices or timing on the interest rates. But ultimately, the time that's the best time for you to buy a house is when you are ready. That you are financially ready, whether that's you have the down payment that you want, and then you can figure out what your monthly payment is, and all that stuff. And that's what makes the sense because the interest rates are going to do what they're going to do, and the prices, historically have typically considerably kept going up, and so those type of things that it's just making sure that you're ready to purchase that house. And I love sitting down with my clients, like I said, the coach's mindset. Let's get a game plan. Whether a lot of people are like, well, I want to buy a house next spring. Okay, well that's great, but and I look at this personally, like when we were looking to build our house, I'm like, well, if we can save an extra 5,000, 10,000, whatever that number is that you may have in your head, that's your comfort number. But when you break it down into brass tacks, that 5,000, 10,000, 15, 20, whatever that number is, it's only going to affect your monthly payment by about $5 to $6 per thousand that you may save. And so if you're going to save an extra $5,000 to put down on a house, and gosh, that's going to put a dent in my house payment. It's only going to put a dent by about $25 to $30 a month. And then what is that going to take, and how is that going to affect, if you wait, how long is it going to take you to save up that, five, 10,000, $20,000? If that takes you 6 months, if you started at the beginning of the year, and now you're just ready to buy a house and you were thinking about buying a house and you went all the way through, those prices might have gone up $10,000, $15,000. While you tried to save $30, you're end up spending $15,000, $20,000 more, and it's kind of a wash in the end. And ultimately, but again, it comes back to what is the right time that you feel comfortable to maybe have an emergency fund set up, have your down payment set up. Maybe you're, getting your career more established or wherever you're at in that regard. So, yeah, that's just the thing you got to think about in those aspects of it. So, but yeah, so I guess that's kind of all I got for today. I mean, I don't know, do you have anything you wanted to add on to that or anything you got left over?
Nope, I think just stay cool and enjoy the rest of your summer. School's starting.
Yeah. Yeah. And the thing is, and it's also too, it's just making sure that your timing is right. I know I got a client right now I'm working with that they may want to keep their house as a rental. And so I'm talking to them and it's like, hey, I want to help you be successful to set yourself up for a financial future that can benefit you, your family, and get that ball rolling on there. And maybe it's not the best, thing for you, but if I'm in their shoes, I want to gather as much information from as many, people that are in the industry or good. I want to hear the good side. I want to hear the bad side. If I'm keeping a rental house, keeping your existing home as a rental, do you need to do a bridge loan? Do you need to pull a HELOC? What are the options to go buy that next house to keep your existing home? And maybe it makes sense, maybe not. But that's the things, what we're going to do here at Champions. We're going to coach you, give that information rather than, oh, you need to sell this house. And, I'm talking to you like, oh, I just want to put a sign in the yard so I can get a commission check. Well, that's not benefiting you. That's not a fiduciary responsibility. I have a legal responsibility to do what's in your best interest, not just to throw a sign in the yard. And yes, I can sell it. And if what we go over doesn't make sense, happy to put a sign in the yard, happy to sell it for you, move on to the next one, and let's rock and roll. And maybe we'll go buy a rental property or something like that. So, but anyways, yeah, it was kind of a long-winded, short market update here. So, but anyways, have questions, reach out to us, 672-7670 or 290-8936 for Russ. And we're happy to help you any way, shape, or form. And have a great first week of school for those that are out there in school. And watch out for those kiddos running across the street, so they're excited. So we always try to teach them to stop, look both ways, all that fun stuff. So, but anyways.